Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of finance and business. And let me tell you, TeraWulf is about to give us a few things to puzzle over. Get ready for some big news about how they're raising money and what they plan to do with it. Before we dive in, if you love getting clear and simple explanations of these company filings, make sure you hit that subscribe button and ring the bell so you don't miss out. Also, we have a fantastic Discord community where we break down these reports even further, so check the link in the description to join us there. And today we're looking at TeraWulf Inc. and their latest filing for August 2025. This report is basically a heads up to investors about some significant financial moves they've made. Think of it as a company announcement, but with all the official legal jargon that can make your head spin. We're going to cut through all that and tell you what it really means for the company and for anyone who's invested in them or thinking about it. This particular filing is an 8K, which is a report of significant events that a publicly traded company needs to disclose to the public. So when you see an 8K, you know something important has happened. In this case, TeraWulf announced they've completed a major offering of convertible senior notes. Basically, they've borrowed a lot of money, but in a way that could turn into stock later. So what's the big deal with convertible notes? Imagine you borrow money from someone. Normally you just pay them back with interest, but with convertible notes, it's like a side deal. The lender can decide to take back their money or they can swap it for shares of your company. This gives the company flexibility and it can also attract investors who are hoping the company's stock price will go up. TeraWulf has just finished selling $850 million worth of these convertible notes. They're paying a 1.00% interest rate on these notes, which is actually quite low, especially in today's market. That's a good sign that they can borrow cheaply. They didn't just sell $850 million, they also gave the people who bought these notes the option to buy an additional $150 million worth. This is like a bonus option for the buyers if the company does really well. After all the fees and expenses, they ended up with about $828.7 million. So a pretty good chunk of cash they can now use. Now the big question is, what are they going to do with all this money? Part of this money, about $85.5 million, is going towards something called capped call transactions. This sounds complicated, but it's essentially a way to limit how much their stock price can be diluted if and when these notes are converted into shares. It's like a financial hedge to protect their existing shareholders from too much dilution. The rest of the money is going towards expanding their data centers. This is a core part of their business. More data centers mean they can do more processing and likely earn more revenue. They're also keeping some for general corporate purposes, which means they have flexibility for unexpected needs or new opportunities. Now let's talk about the actual terms of these notes. They've entered into an agreement called an indenture with Wilmington Trust. This document lays out all the rules for these notes. These notes are senior, meaning if the company ever went bankrupt, bondholders get paid before some other creditors. They are also unsecured, meaning there's no specific asset backing them. They pay interest twice a year at a low 1.0% rate. The first interest payment is scheduled for March 2026. These notes are due to be fully repaid or converted by September 2031. That's a pretty long time for a loan, which is also a good indicator of investor confidence. Here's where it gets really interesting. These notes can be converted into shares of TeraWulf's common stock. Right now, the conversion price is about $12.43 per share. This means if the stock price goes above that, buyers of these notes will likely convert them into stock making a profit. This conversion rate is also subject to change based on certain events, which is pretty standard. Before June 2031, investors can only convert these notes if specific triggered events happen. Think of it like a special condition for early conversion. However, closer to the maturity date, investors have the freedom to convert them whenever they want. When conversion happens, TeraWulf has the choice to pay investors either in cash or a mix of cash and their own stock. They can decide what's best for them at that moment. A crucial point here is that their ability to issue stock upon conversion depends on getting approval from their own shareholders to issue more stock than they currently have authorized. If they don't get this approval, they might have to pay more cash, which could impact their liquidity. TeraWulf cannot buy back these notes before September 2028. They are locked in for a few years. After September 2028, they can choose to buy back the notes. They can do this if their stock price has been performing really well for a sustained period, meaning it's 130% higher than the conversion price for 20 days. If they do this, they'll pay back the principal amount plus any unpaid interest. If something big and unexpected happens called a fundamental change, investors can demand that TeraWulf buy back their notes. This is a protection for investors in case of major negative events. The indenture also includes standard clauses about what happens if the company defaults on its obligations. If things go really wrong, investors representing at least a quarter of the notes can demand all the money back immediately. This is a pretty standard safeguard. Let's revisit those capped call transactions we mentioned earlier. These are agreements with financial institutions to offset potential dilution. These deals were struck around the same time the notes were priced in mid-August. These contracts are designed to limit the negative impact on the stock price if the notes are converted. They also help manage cash outflows if the conversion leads to payments above the note's face value. It's a way to smooth things out for shareholders. The cap price is set at 18.76 cents. This is double the stock's price on the day of the deal. This means if the stock price goes way up above this cap, the protection from these cap calls diminishes, but it still provides a significant buffer. As mentioned before, this protection came at a cost of about $85.5 million. It's a substantial amount, but the company clearly felt it was worth it to manage the dilution from this large note offering. The creation of these notes means TeraWulf has taken on a significant financial obligation. This is an important item to report as it directly affects the company's balance sheet and future financial commitments. This section is about the fact that these notes and the potential shares they convert into haven't been registered with the securities regulators in the usual way. This is because they were sold directly to specific types of investors considered qualified institutional buyers under a specific exemption. They don't plan to register them later, which means there won't be a public offering of resale for these notes or the shares. Like all filings of this nature, this report includes what are called forward-looking statements. These are statements about what the company expects or plans for the future. Words like anticipate, believe, and expect are clues. The company is legally required to tell you that actual results could be very different. They mention that risks discussed in their other SEC filings, like their 10K and 10Q reports, could affect these future outcomes. They also explicitly state they don't have to update these forward-looking statements if things change unless the law requires it. This is standard legal protection, so they aren't held liable if their future plans don't pan out exactly as stated. Finally, the filing lists the specific documents that back up everything they've talked about. These are the actual legal agreements and forms. This exhibit is the big legal contract for the notes. This is the actual template for the notes themselves. And this is the form of the capped call agreements, the deals to manage dilution. And the report is signed off by Patrick A. Fleury, the Chief Financial Officer. This confirms the company stands by the information presented. So what's the big picture here? TeraWulf has successfully raised a significant amount of capital through convertible notes at a very attractive interest rate. This money directly fuels their expansion plans, which is a good sign they're investing for growth. The capped call transactions show a smart move to protect their existing shareholders from excessive dilution, which is always appreciated by investors. The key thing to watch now is their ability to get shareholder approval to issue more stock if needed for note conversions. If they can't, their cash reserves might be tapped more heavily than planned. However, the low interest rate and the long maturity of these notes suggest strong investor confidence in TeraWulf's future. It's a calculated move to fund growth and manage financial risk. Alright, that's our breakdown of TeraWulf's latest filing. What are your thoughts on this capital raise and their expansion plans? Do you think they'll get shareholder approval for more stock? Let us know in the comments below. If you found this analysis helpful, give us a thumbs up. And most importantly, subscribe for more corporate deep dives like this. And remember to join our Discord community for even more insights every week. Thanks for watching. See you next time.